In this video, we're going to be analyzing OCGN. We're going to go through the main technical analysis, which will be the bulk of this analysis, and we'll quickly run through two fundamental issues. So to quickly get straight into it, one thing I want to point out first, and we'll be looking at the right chart just because it's more clear, is how this stock's been moving more recently. So you can see we had our earnings, came in, they had an earnings per share of -7 cents per share, and you can see off this release, the price didn't move all that much, again most likely priced in. Now the key thing though is you can see here we went from around 70 cents all the way down to now trading around 45 cents. Why did this happen? Because this wasn't on earnings. So this was down to share dilution. They're looking to issue more common shares, and again if there's more shares outstanding, then obviously the existing shares which were already out aren't going to be as valuable. So that's firstly why this stock has sold off from a fundamental standpoint. And the other issue you have is obviously the $1 mark is here. We're trading below this value. We can see we're listed on the Nasdaq. A Nasdaq requirement is you trade above $1. If you don't, you're likely to get delisted. So there's either two solutions OCGN can go through. Either they get delisted or they get their stock above $1. Now they're probably not going to be able to naturally get their stock back above $1. So what they're going to have to do, artificially do it, which will mean they'll go through a reverse stock split. And whenever a company does this, this is never a good thing for investors, because yes, it doesn't actually change the overall share value or anything like that, but it's just showing that the company has weakness. If it cannot even keep to its listing requirements, it's having to do a reverse stock split. What you tend to see is the stock continue to sell off as soon as that split happens. So even if they did a 1 for 10, call it, will turn the stock into about a $4.50 per share stock, but very quickly you'll probably see it trade back below $4 or even $3, probably within the first 2 weeks of it having its reverse split. So now to run over the technical analysis over on OCGN. Firstly, you can see these grey dashed lines here. What are these? So from a standard deviation perspective, from between a 6-month and 1-year chart, this is what is considered fair value. And what you'll be thinking is, but we've barely traded under this value. And this is because standard deviation accounts for the overall trend. And what you can see on both that 6-month and the 1 year is the 6-month we're downtrending, 1 year we're downtrending. So it does mean that the overall value it's going to account for is going to be lower. And so right now, again, if it's something we're looking at investing in, again, you've done your due diligence, something you think is quite a sound investment, you want to be trading it or investing in it, anything at this value or below is where we look to usually invest. If I'm investing in my personal account, again, this isn't a stock I'm personally going to be holding, but if it was, this is the value I look to get at, or anywhere below. So from an investment standpoint, could be a good value. Now, from a trading perspective though, these are fair value. So if you're a reversal trader, this is going to be your target. If you're short bias, that's your target. If you're long bias, again, you're going to be looking to buy below that value and trade to that level. Now, we're currently trading at this level, and this means if I'm not in a position, I'm not looking to open one anytime soon. What I'm waiting for is if we go to the downside, really, I'm not looking to trade this at all. Reason for that is, again, it's really just a falling knife. Trying to catch that can be dangerous, and we have no supports to the downside. So if we continue to push into that downward range, to me, not something I'm going to touch at all. Where I find that the trading opportunity comes is if we're able to actually break to the upside. And again, we would require quite a significant move. From about now, we would need near enough 100% upside for my first trading opportunity, and that would be at 88 cents. From this level, this is where I'm looking at trading at short buy. So again, shorting the shares. We can see they do have options. So this is quite handy because it means we can short the shares, buy calls to hedge that risk, or we can go through some other strategies such as credit spreads or just outright puts. So there's a lot of different ways we can trade this if it pops to the upside. But again, to me, it's being patient. If we're not at 88 cents or above, I'm not trading it. I'm not forcing it. I'll just be patient and look at other trades until this one provides that opportunity. So short bias at 88 cents. If we broke that, it would be $1.08 and $1.28. Again, these are all short bias levels if we could pop to these. Now, this doesn't mean to say that is so-called my target. Yes, if I was long bias, I would be using this as a target, but I wouldn't be buying now in anticipation or expecting it to go to this value. And the reason for that is this is considered a bit more overbought on the stock. So it requires a really weak stock like this to kind of get bought up and become a bit overbought. Not even just bought up, but become a bit overbought to become to this value. So to me, it's not something I would buy in anticipation of it going to that level, but it's more if we hit that level, then I can look to play the reversal, which we're most likely going to get on a stock like this. So again, key resistances where I'm looking short bias, 88 cents, $1.08, and $1.28. So that's the key resistances. Again, supports, we don't really have any, not paying attention to the downside. We just got our fair value, which is where we are now, 37 to 47 cents. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.